Hey, good morning, everybody. It is a beautiful day here in Southern California. I have Keith Murphy with me, our trusted professional, and we're having a few little issues with the bandwidth back and forth between Keith and myself, but I'm hoping that the recording is going to come through loud and clear for you. So these are the crazy days of Zoom and everybody teaching their kids from home. So we're going to go ahead. The question that we have for Keith today, question is, you have just gotten into contract, you're buying your first home, you're super excited, and you're going to call your lender and have a conversation about the next step in your loan process. More than likely, you're going to be asking your lender, what is the interest rate for my loan? So with that, Keith, take it away.
All right. Well, this is one of my favorite questions because it means somebody's in a position to buy a new home. And yes, once the contract's accepted and escrow is open, it's time to talk with your lender about locking in a rate. That turns into somewhat of a dynamic conversation because everybody wants the lowest rate. Everybody who's buying, anybody who's refinancing wants the lowest rate possible. And so the first question people should be asking themselves and their lender is now a good time to lock? Or should we start the process and float the market in hopes of a better interest rate, maybe in a few days, maybe in a week or two prior to closing? The interest rates for a mortgage can be locked at any time after escrow's opened. It can be locked on day one, halfway through the process, or towards the end. And it's about knowing the market and the timing of the market because, and what most buyers don't understand, interest rates are tied to the buying and selling of mortgage. Those bonds are just like a share of Apple stock or Home Depot stock. Whatever the price per share is today is going to be different in 5 minutes. It's going to be different this afternoon. It's definitely going to be different tomorrow. Is it going to be better? Is it going to be worse? We don't know because nobody has a forecasting tool or crystal ball, right? To know, will the Apple shares be better next week? Will they be more expensive next week? Should I buy it now? It's the same concept. With your interest rate, it changes. So I would normally share a screen to show the bond trading trends so that you can see what I'm seeing with regards to over the last 5 days, over the last 30 days, 90 days, and 6 months. What has been the trend? Where's the price of the bond going? Where have the interest rates been going? Start to see a pattern. And if we're at top of a range, meaning interest rates are retesting all-time lows, my advice for clients is to lock it in. Nobody's ever going to complain about getting too low of a rate. So if you like what you see and it makes sense and market-wise it looks like it's hitting a low range-bound price, then it would be a good time to lock. Conversely, if there's been some things driving the market in the opposite direction, and you believe that the tide will turn between now and the closing of escrow, then if the client's comfortable with it, we would say, let's consider floating then. And let's watch it day by day and have a conversation every day until we lock to make sure that we're taking full advantage of the markets and the technical data that we have in front of us. So it's a dynamic question, and kind of recap, do I lock, do I float? It's a dynamic question because you got, and then the conversation goes in another direction, which is what I call like the other side of the coin. Once you're locked, do you lock with no points, meaning you don't pay any extra costs to get your rate lowered? Or do you add to your closing costs by getting an eighth or a quarter or a half or heck, a full point lower on your interest rate? So I also have spreadsheets which show clients those options so that they can determine, okay, as an example, if I lock today at 2.875 on a 30-year fixed with no extra fees, what is going to be my annual interest cost? What's going to be my lifetime interest cost versus if I look at the different buy down options, what are those corresponding costs? How much will it lower my payment? And based on that lower payment spread, how many months will I need to be in that loan to make back my money and break even? And then what will my interest savings be for the remaining term of the loan? So then it gets into a conversation of, well, is this a good thing to buy down the rate, or is it not a good thing to buy down the rate? And that's all determined based upon timeline.
Right.
If somebody's going to be in the home long term, sometimes it makes sense to buy down the rate and realize interest savings after the break-even period. Other times, clients might be just in a starter home. They're going to be in it for 3 years, 5 years, and they'll never break even by paying points. So we'll show them that so that they have data to support their decision to do a no-point loan. Then the last thing to consider is, well, Keith, where do you think the market's going to be in 3 months, 6 months, 12 months? I mean, do I pay points now because I'm going to be in the home long term and lock in that lower rate, or should I do the no point loan and hope the market gets better in 6 or 12 months, and then you could refinance me into the better rate without me having to pay the points? So it's pretty dynamic. He understands the markets to guide you and have tools to show you the information you need to make an educated decision. But that, in a long-winded way, is how I approach the question, should I lock my rate?
That's phenomenal. So much information there. I know that probably for most people, they're going to need to go back and re-watch this to take some notes and be able to digest the information. But let's plan on revisiting this with maybe expanding into the rate lock and the costs of rate lock, and we'll get that spreadsheet up there the next time and be able to give a little bit better, show the visual so that you can be able to explain it. How does that sound?
I think that is fantastic, because if I can share this data as far as like the screen and the video can capture the information, it's going to be easier for everyone to digest. And I think it's also important, and we'll go into this next time as well, to understand that most advertised interest rates on the internet, on the radio, on the TV are very misleading. Those things you get in your mailbox, very misleading. So we could also dive into what to look out for and what to read in the fine print, so that you realize that a lot of these things that land up in your lap are kind of bait switch tactics. And yeah, I think that'll be a good topic, Kelly.
Okay, fantastic. And yes, let's have some of that disclaimer language that we can read through to show the public, the viewers, exactly what to look out for on that. It is showing that this rate was for that snapshot in time that ad was prepared. It's not necessarily the rate that's available when it shows up in your mailbox or on your email.
Absolutely true.
Okay. Terrific.
Absolutely true. Yes.
Keith, thank you again so much for your time today. I really appreciate your knowledge and expertise and being willing to share. And we'll drill down on the other, more about rate locks and rate lock extensions and fees to be able to get discounts. And we'll do that at another time when we've got better bandwidth, and we'll be able to share the screen. So get more information. Always a great.
Sounds good.
You're always a great source for all things mortgage related, and we really appreciate you and your willingness to share. Thanks, Keith.